Hello, good day, guys, and welcome to today's analysis on currency pair United States dollar Swiss franc. And usually, as normal, we'll be talking about fundamental analysis. Then we move right down to technicals, which will be purely what we'll be seeing on the chart. Now we can see that the Bank of America analysts anticipate selling pressure on the USD chip due to the month-end approach driven by primarily strong US equity performance in July 2025. Now, the bank research indicates that robust United States equity gains typically create a bias towards selling the USD into month-end rebalancing flows, though ongoing de-risking by Swiss investors may complicate traditional rebalancing as well as patterns before the notes that negative returns in bond aggregates suggest unwinding of hedges, making the direction of flow less certain than in recent months. We are seeing BOF's analysis on the Swiss franc price action from 3 days before to 1 day after month end. Revealed that most month end activity occurs on the final day of the month and the first day of the following month when the S&P 500 has monthly returns below 2% and chef buying occurs, the USD chef will fall by an average of 1%. Now, technically, we are seeing a very important zone being respected here, the support zone at 0.80359, and we're expecting that the bank research, which showed that USD selling has been dominant flow in recent years, will be correlating well with equity market performance, particularly during months when the S&P 500 posts large gains exceeding 2%. Now, we have a couple of important moves to the top at 0.80820 and more upside being projected. So if we had to wait for the breakout from this resistance point at 0.080820, we're expecting a new high at the 0.81 axis thereabout, which of course from this point we are looking at nothing less than 50 to 100 pips, of course, which is good money. Now that's our technical analysis on today's currency pair United States dollar Swiss franc. I remain your host, Nick. Bye for now.